Hi, everyone. It's Wednesday, December the 14th, and we're ready to start another live stream talking mortgage and real estate. Let's invite Jillian over. Join us. How's everybody doing? Could you try again? Oh, why are you talking to me? Okay. Are you there? Perfect.
Yes.
Hello.
Hello.
Happy Wednesday. How are you, Ariana?
I'm doing fabulous. How are you doing?
Oh, not too bad for a Wednesday. Counting down the days to the new year. So,
Are you ready? Have you completed your holiday shopping and everything that you needed to take care of?
yes, I'm about 85% done. Maybe a few little stocking stuffers that I could pick up. But for the most part, I'm ready. How about yourself? Are you?
We decided to do a white elephant kind of gift this year, so I am done. It makes things a lot easier.
Yes. I'm proud of myself for being at 85% because usually I'd be that guy in the mall on Christmas Eve trying to pick something up. So
And it's horrible. It's
yeah,
horrible to be running around, battling the crowds.
tell
Don't
me
be that
about it.
dad that forgot that Christmas gift and you can't find it.
No, I guess the resolution I made last year is working out. So
Right? Oh my gosh. Well, that's good. That's good. We're ready to go. So, let's get into interesting matters. What our buyers out there keep questioning themselves with all the different variables and subject that real estate and loans is, right? Um, this time around, we kind of decided for you guys out there to talk a little bit about the types of financing because there are multiple loan options. And when you talk to a mortgage lender, they will kind of see the overall picture and suggest what works best for your particular case. But, once that is determined, I still get a lot of questions about what does that mean? Like I was pre-qualified with this type of financing, but I don't know what it means. So fortunately for us, we have Julian. So we're going to dive a little bit into this, if that's okay with you, Julian.
yeah, definitely. There's a lot of different financing options and pros and cons to each one of them, and it depends on each individual's set of circumstances, their financial picture, and their short term and long term goals that'll help determine and shape what's the best option to go with. And so, yeah, I thought we would be breaking down, the three main types of mortgage financing, and explain again a little bit of the nuances between each one, and then ultimately, like we always say, reach out if you have any questions, because again, there's no two loans that are the same. So
Correct. So Julian's going to be doing the majority of the talking because this is definitely his this is exactly what he does. This is his lane. I can only comment a few things and I'll probably touch a little bit on it from the real estate side, what that means, say, for a seller when a buyer has this type of financing to maybe just give it a little bit more of understanding, if you will. But like Julian was mentioning, I guess the three top loan programs out there are the ones that we hear the most are, an FHA, a conventional loan, and then we also hear a VA. So let's take a little look at, I guess, FHA. Let's start with the FHA loan, Julian. Tell us what does that mean? If we're talking, maybe give us a general explanation of what an FHA loan is. I guess that's where we
sure.
should start.
So FHA stands for Federal Housing Administration, and it's a loan program sponsored by the government. and it is geared towards first-time home buyers. It's not exclusive to first-time home buyers. The reason why is the credit score requirements are a little bit more forgiving, and the down payment requirement is lower than per se, a conventional loan. Um, so these are again insured by the federal government, and it's again a great way for first time home buyers to get in with a lower down payment requirement, higher debt to income ratio limits, and the pricing is a little bit better, which we'll kind of talk about here. But
I
when
was
it
just
comes,
gonna say, let's break that down.
yeah, let's break it down. Let's get into it.
Let's break it down. Yes, so it's easier as we're talking about it. And when you say, yes, of course, we get a lot of first-time home buyers with this type of loan, and makes it easier for them due to the down payment. So if we're just discussing down payment, what is the down payment for this type of loan?
So the minimum down payment requirement for an FHA loan is 3.5% of the sales price.
Okay, but that means that I'm not limited to just that amount if I wanted to just add, extra down payment. I just wanted to put more down, right?
Correct. You can put
Okay.
as much down as you want to, and there are different reasons why you would do so, but that's just the minimum.
Okay. Is there a credit score requirement? What's the minimum credit score? Because I keep getting the question of or we keep, I guess, hearing that you can qualify with as low as a 580 credit score.
Yeah, 580 is the minimum credit score requirement for an FHA mortgage, and when your credit score is between 580 and the 620, the maximum debt to income limit ratios are limited, but it's just very still possible at a 580.
Okay, so if we're mentioning debt to income ratio, so just to clarify this, that means that the debt that you currently have. Oh, did I lose you, Julian, on the
No,
Instagram feed?
I'm still here. I think. Can you hear
I
me?
think it's just refreshing. I can hear you on the other platforms, but I think on Instagram you are frozen there for a second. So I don't know if it's the connection. Oops, I lost you. So let me just add you one more time.
Join. No, I'm still in there.
Okay, there we go. Okay, I just invited you again, and maybe double check if that is. Did it come through? Okay, guys, we're having a little technical difficulty here on Instagram platform. I'm just trying to add Julian again so we can keep discussing the types of financing or loan programs that there are available for buyers out there. Did you get the invite, Julian? I sent it again. Okay, invited.
Internet connection.
Okay. So anyhow, so we're discussing FHA conventional and VA loans, just to kind of give you an idea, so you have a little bit more knowledge on what option is best for you, and if you are not understanding what you're getting pre-qualified with your different with the mortgage lender that you're currently at, you can certainly get a second opinion here with us, or with Julian, I should say. We're just trying to get him back on.
Trying here, but
I just sent you an invite again.
Let's see.
Did you get it?
It's not coming through.
Okay. Don't know what else to do because it is sending the invite, and I see you on here, but
yeah,
it's not. So I don't know if maybe we should be turning this around. I'm going to have to probably improvise because our speaker is not able to connect through Instagram, and we really want you to understand what the loan programs are. So
This is
if you're thinking about buying a home, that you know exactly, who to ask and what to do. So internet connection, it's slow on Instagram. That's what we're being told. Okay, so I think I'm gonna have to restart the live, maybe, and see if that fixes the issue. But I don't want to lose what we got. What if I were to switch the camera over? Okay. Well, let's do. Okay, Julian, I'm going to try it one more time. And if not, we're going to have to restart it live just to make sure that. Did you get it now?
No, it's coming through on my computer, but not on my phone.
Okay, I'm going to start it again on Instagram. Okay. So we're still connected over here, and I'm ending this, and we're just going to have to kind of redo kind of what we had done just to make sure. Come on.
As 2022 comes, dear clients.
I don't want that. Okay, let's go live again. Sorry, guys. This is what happens when you're doing a live story or live streaming. Okay. Let's see. Okay, here we go. One more time. Okay, so we're back on. Hi, everyone. We had to restart our live because we were having issues with Instagram, and I'm inviting Julian again to see if that fixes the issue. Did it?
No, it's not coming through on my phone. It just keeps telling me no internet connection, but...
Okay, maybe try joining from your end. Maybe request, so go on
okay.
And maybe ask, to join this live. So anyhow, guys, we're going to be talking about types of financing. We're actually splitting it into two parts because we want to make sure that, right now we're talking about just FHA, conventional, VA loans, pros, cons, requirements, just to make sure that you understand what you're getting yourself into once you are applying for a home loan. And then hopefully, the next live, we're going to be talking on part 2, the types of financing, more of the non-conventional financing. So kind of like a seller carryback, USDA, private money lending, hard money lending, rent to own, bank statement. So there are multiple programs out there to purchase a home. We just have to make sure that you're understanding what that means, that, that your mortgage lender is explaining to you what each one of these loan programs means to you and how, which one do you get the most benefit of? Because then, lender sees certain things on their end and he will kind of better direct you. So let's see if we can add Julian now again.
Should be. All right. Here we go.
Okay. There we go. Okay, we're back on. So Julian's back on. We're going to keep, maybe I'll kind of summarize again since we just kind of lost Julian there for a while on what we kind of touched a little bit on. The types of financing, that's what we're looking at, conventional, FHA, and VA. And we were discussing about the FHA loan, how usually it's first-time homebuyers that get this type of loan. The down payment, the common down payment for this type of loan is 3.5%, so 3.5% of the purchase price, and also credit score anywhere between 580 and 620. So you can qualify as low as 580. Usually, we suggest that you're above 620. Correct?
Julian? Yeah, 620, and there's no additional conditions applied to the approval requirements, and just makes it a little bit easier to get approved.
So are there so on the different types of financing or loan programs do the rate changes? Does that change?
Yes, yeah, from one product to the next or program to the next, yes, there will be a difference in pricing. FHA is going to be a little bit better priced than FHA and VA are going to be very similar to each other, and conventional is going to be just a tad bit higher than both of those programs. And question, feel like you have one loaded up there.
Like right here. Is there a loan limit on FHA?
Yes, absolutely. There is a loan limit. For 2022, the loan limit's at $420,680. Starting next year, the loan limit's going to be increasing to 472. I want to say it is.
Okay.
So a little bit more buying power for FHA buyers, and that's been kind of one of the drawbacks with FHA financing for some buyers is that loan limit. So,
okay,
like I said, with that increasing next year, it should open up some more doors for potential home buyers.
Because if anybody wants to purchase a home that is in a higher price tier than the limit, then that means they would have to choose a different type of financing or put the money cash, right? The difference, they would have to, come out of their own pocket to make up for that difference, correct?
Right, exactly. Yeah. If you were,
okay,
say, looking in a 500, 600 price range, then you might need to go to conventional, or if you had to stay FHA, like you said, cover the difference between the loan limit and the sales price.
Okay, so now if we're talking conventional loan, what does that program do on its own? Like, what is the difference now from what you just explained to us on FHA?
Yeah, so conventional loan program, for one, the minimum down payment credit score requirement for a conventional loan is going to be a 620. However, realistically, it's really hard to get an approval less than 660. It depends on, again, certain loan characteristics and compensating factors, but it can go as low as 620. The down payment requirement for a conventional loan, if you're a first-time home buyer, it's going to be 3% of the sales price. If you're not a first-time,
can you elaborate? Can I stop right there for a second? Can you elaborate first-time home buyer?
Yeah.
Because don't they say that if you haven't owned a home in the past 3 years, you can be considered a first-time home buyer? Is that correct or not?
That's correct. So if you, like you said, haven't been on title to a home in the last 3 years, then you are considered a first-time home buyer. And therefore, you could qualify for a conventional 3% down payment,
which is a little lower than FHA.
Right.
Which that's what we like, because less money out of pocket, right?
Right.
Higher credit score. You need a higher credit score for this, but then you put a little bit less money. Okay. Right. So, and then if you have owned a home within the last 3 years, that's when it goes to the 5%, I take it, right?
Correct. Yes.
Okay.
So if it's a subsequent home, if it's your second or move up home, or like you said, you have been on title within the last 3 years to another property, then the minimum score down payment requirement will be 5% of the sales price. Now, one of the main differences with FHA and conventional is going to be your mortgage insurance requirement. So, mortgage insurance is something that's required whenever you put less than 20% down, and the mortgage insurance requirement on a conventional loan is a little bit more affordable than it is with a FHA loan. And kind of like we were talking about a minute ago, the reason why FHA loans interest rates are a little bit better than a conventional loan is to kind of almost compensate for the difference in monthly mortgage insurance.
Okay, so if I'm getting this correct, FHA higher mortgage insurance, lower interest rates. Conventional, lower mortgage insurance, higher interest rates, correct?
You got it.
And
You
higher
nailed it.
transfer.
Right. So those are one
Is
of the
there,
main.
I know, right? So are there, what's the loan limits on a conventional loan?
So the loan limit for a conventional loan is at gosh, drawing a blank, but it's six. I want to say 618 right now, and
Well, it's quite a bit of a difference. So
quite a
say, roughly around 200K,
yeah,
maybe, give
yeah,
or take,
yeah, very
from one
significant
program to
difference
the other.
from one to the other, and that's also increasing next year to I want to say 725.
That is awesome news that they're
Yes,
increasing to have more options.
yes, because anything above that would be considered a jumbo loan, and that's another topic I guess we'll kind of go into in the next series. But
Next Wednesday, we can certainly talk about all the other ones that are not our most common or typical types of loan programs. Okay, so now you were mentioning when we're having this little technical difficulty, something about debt to income ratio. Can you elaborate what's debt to income ratio and how do you calculate that?
yeah,
Generally
so
speaking.
generally speaking, your debt to income ratio is a calculation or how we measure, how much you're paying for your total outgoing liabilities versus your income. So we're going to be looking at things that appear on your credit, like your auto loans and credit cards and student loans, or personal loans. So not your ordinary everyday living expenses, gas and food and that stuff is not included in your debt to income ratio. So again, we take the total amount of your monthly obligations, credit obligations, and we divide that by your gross monthly income, and that's going to
Okay.
give us your debt to income ratio. So
Okay, so you're not taking into account the entire debt. It's just the monthly payments we make on our debt, correct?
correct. Yes, just the minimum payments that are reported on the credit report.
Okay, that's good to know. So then if we go into our third type of loan program, VA loan, that,
Yes,
applies to all of our great military service, right?
correct. Veteran VA loans are going to be for veterans, active or off-duty veterans that that is also another government-sponsored program that allows a veteran to buy a home with a zero down payment requirement. So that's the least
That
that we
is
could do.
huge. That is huge. I think they give too much, so it's only fair that they get a little bit back. So zero down payment if you are active or work or or you're in any military branch. Just make sure that you use it. Take advantage of it. Why not? So in regards to credit score, and how does that apply to the VA loan?
Yeah. So with regards to credit score, VA has the same minimum credit score requirement as FHA. It's going to be a 580 credit score. And similar to FHA, there's a couple of restrictions placed when you get into 580 to 620 range. It's a little bit more lenient because they really kind of base it off of your residual income, which is a technical term, but it's very similar to what a debt to income ratio would be.
Okay.
So the minimum is 580.
Okay, minimum 580. How about rates? How does that compare to like an FHA or in a conventional loan? Do they get better rates or are rates about the same?
Yeah, rates are, it's pretty much the same. There's maybe an eighth of a percent difference from, a VA to an FHA. And, from an FHA to a conventional, it's probably about a 1/4% difference.
Okay.
So there are slight variances in the interest rates.
And I take it that there is a loan limit as well for a VA loan.
There is the loan limit. It follows conventional,
So it's a
loan
little bit
limit.
higher.
Yeah, so it's a little
Okay.
bit higher. It also depends on how much entitlement the veteran has. So if it's their first time use, then you know it kind of ties into, well, to back up again, there's no down payment requirement. But if you are a veteran and you've used your VA entitlement once, you can use it again. But there again, some stipulations put in there in terms of you might have to have a down payment depending on the sales price you're looking at.
Okay. So just to recap, before I bombard you with questions, because a
Yes.
lot of questions come, right? With this to try to clarify and make sure that everybody's understanding what the point that we're trying to bring across the screen here. So correct me if I'm wrong. So I'm just trying to, see it from the buyer side. So an FHA, you can qualify with as low as 580, even though it's probably better to start at the 620, but the minimum is 580 credit score, and then we have to 3.5% down payment. And there is a mortgage insurance included to this, a little bit higher than a conventional. If we're talking conventional, then the credit score is a minimum of 620, even though we prefer 660. And down payment could be if you're a first-time home buyer, so you haven't bought or owned a home in the past 3 years, it's at 3%. If not, then you go into a 5% down payment. And then let's see, and then the VA, 0 down payment, and it kind of follows suit with FHA, except for the loan limit is higher, kind of like a conventional. Did I get that right?
Right. And the only thing I would add to that is the VA. There is no mortgage insurance requirement, so
Even better.
that's a big savings for the veterans.
Okay. Well, I'll go through some of the questions just so, again, we clarify a little bit more on certain things. So explain to us, because I do get asked this quite a bit, what is the difference between a mortgage insurance and a home insurance? Because people get confused.
Yeah. So so mortgage insurance is insurance for the lender in the event that you were to default on the loan and the home would go to foreclosure. The lender can make a claim against that mortgage insurance and recoup some of the loss incurred through the foreclosure process. Um, so it does everything for the lender, nothing for the homeowner, to be honest. Um, Homeowners insurance is, again, if there was a fire in the home or, something, a major component, storm comes and, damages your roof, a tree falls on it, you call your insurance agent and you start a claim so that they can help contribute towards the repairs that are needed for your home.
Okay, so one protects the lender, the actual loan, and the other one protects the actual home.
Correct.
Right?
Yes.
Okay, got it. So now on that same subject, on the mortgage insurance, can that be removed? And if so, how do you proceed to remove it? How do you know when it's time?
So yes and no. So it depends on the program. FHA, it is on there for the life of the loan. So the only way to get rid of it, if you buy with an FHA mortgage, is to refinance into a conventional mortgage. Because with a conventional mortgage, you can remove mortgage insurance, and there's 3 ways that you can do that. One is through once your balance reaches 20%. I'm sorry, once you pay down 20% of the loan amount versus the original purchase price, or if you've done some improvements to the home, you can request your lender or servicer to do an appraisal, and they'll look at your loan to value ratio based on the current or new appraised value, and thirdly, after a certain period of time, it just falls off of the loan. So automatic removal.
Okay. How do I make sure that it was removed? Or if it's not removed, like how can one know?
Yeah, so your monthly mortgage statement will have a line item on there for, mortgage insurance. You can call your loan servicer, and they'd be glad to kind of again explain those three options to you in terms of mortgage insurance cancellation. But that's going to be the best ways to find out is calling your loan servicer or the lender that helped you, and they can probably guide you in the right way.
Oh, gotcha. Okay. So then, one question that I get a lot once we start, we're going to start the shopping process, with that pre-approval letter that we've talked about it before, right? Pre-qualification form where it states, the numbers and the type of financing that your mortgage provider has approved you for. Sometimes they don't know, right? If conventional FHA, I don't, sometimes they don't understand the difference. But I think my question goes more to how do you, as a mortgage lender, determine which loan program is better for them?
Yeah, that's a great question, and it's going to vary a lot from one person to the next, and again, their individual circumstances. So
Mm-hmm.
it's going to, first off, really kind of depend on your credit score because that's going to drive, which program you're going to go towards, um, and or which ones you're going to get approved with. So depending on your credit score, the next thing would be your debt to income ratio. So again, depending on your individual liabilities and what your household income is, um, will determine what your debt to income ratio is. And FHA has a little bit more forgiving or has a higher limit when it comes to debt to income ratios. Um, and then assets will be your how much you have for down payment and closing costs. So
Okay.
depending on where you fall in those three categories will help me shift and guide you towards the right program.
Okay. So then, and then another one would be on the VA loan. You mentioned the certificate of eligibility, and you said that, anybody that uses to purchase a home with that certificate in a VA loan, that they can reuse it. So does that mean that they can use it multiple times, but do they have to sell their current home in order to buy the next one and use that certificate of eligibility? Say,
Tip,
if they had already purchased.
yeah. So if you currently have a VA loan, you can still purchase another home using your VA entitlement, and you don't necessarily need to sell, your current or existing home. Again, there's some kind of asterisks to go along with that. And so that's why, we'd encourage you to reach out if that's your particular situation to kind of go through the waterfall of questions that we need to ask and find out to see if you can still use it. But if you are planning to sell your home that you bought with a VA loan and then buy another one, there aren't any asterisks or stipulations in that scenario. Um, Once the sale closes from your current residence, your entitlement will be restored, and you can use that to purchase, your next home using your VA entitlement.
And as always, as I say, and we say on every episode, every situation is different. It's always best to reach out to your professionals and ask those questions because that's what we're here for. We want you to understand and make an educated decision. This is a big purchase, it's a big decision, the biggest one in a lifetime when you purchase a home. And we really like to be there every step of the way so it's clear and you know exactly what are the next steps,
Yeah,
right?
couldn't agree more. There's so many things that factors that go into determining, if you qualify for a mortgage, how much you qualify for, what's the best program. that it's really difficult, as you may have noticed in this live, that I want to give you guys the answers and the information you need, and but again, there's a lot that goes into it. So reach out and be glad to go over your individual set of circumstances, and make sure you feel informed and confident and educated and empowered to make the best decision for, like you said, one of the biggest purchases of our lifetimes.
We certainly have to refrain from everything that we want to share just because, it doesn't apply to everybody, but we have to do it, like, generally speaking, to get the bigger picture. Well, I think it's been very informative. It's always very interesting because even though I've been doing this business, there's always extra nuggets that I get when I talk to you, to keep better serving our clients. I really appreciate all the time, the effort, the planning and everything that we've been doing. Every episode, we give you as much information as we can. Please reach out, as always, if you have additional questions that we might have not covered in any of our episodes. And we're certainly open to having a conversation. No strings attached, just information, guys. If you don't have anything else to add to this, Julian, I think this concludes our 8th episode.
eighth episode, and great episode. We had a little technical difficulty in the middle, but what's social media without a little bit of that mixed in between?
Right.
So no,
we can only control so much.
Exactly, but we can control where we are each week, each day, each time, and we'll see you next week.
Yep. See you next Wednesday. We'll be talking about all those other type of loan programs that are more outside the box, that don't fit with what we were talking currently. Options that you may not have even heard before. So stay tuned, connect next Wednesday, and have a wonderful week. Thank you, Julian, for being here. Until next week.
Thank you. Take care. Bye.
You too. Bye-bye. Whew.